Good morning, everyone. Welcome to Admiral Markets. My name is Chris. We're going to take a look at the charts together. Today is the 12th of March, the Wednesday. Before we take a look at actual charts and stuff like that and technical analysis, we are going to take a look at this PowerPoint just quickly to explain, for instance, this disclaimer saying that the material has been made for an a worldwide global audience. And to get the corresponding info on charting conditions and other details, please take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Then, of course, there's the risks involved. The risk disclaimer explaining that trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So by continuing to watch this webinar, you agree with the risk disclaimer and its content. All right, folks, thanks so much for your attention on that one. So with that said, we're going to take a look at Fibonacci trading. Very exciting always. Fibs are magical. Fibs are very, very useful. Fib levels are basically key level for the market because the market uses them so often. But of course, it's key to know which ones and which fibs are the most important, which ones are the correct fibs. Sometimes there will be some variations, but most of the time you can avoid at least big variations by using at least the correct swing highs and swing lows, for instance. So we'll be looking at fibs primarily, but we will also look at these steps basically as I explain every morning. We're taking a look at the trend, opportunities, filters, triggers, and entry method as a rough idea of a trading document. Good. With that said, we only have one task left. That is to take a look at this calendar to see if we have anything coming up. We got Spanish CPI apparently, and we have some other news throughout the morning, light and medium impact news on the euro, and 12 hours from now we have the New Zealand interest rate announcement. So with that said, now we can move over to our chart. All right, just give me a second as I open my drawing tool here. Good. That should be working. Yes, it is. Alrighty. So the euro dollar, we talked about that yesterday. Let me zoom into the 15-minute. We talked about the fact that the euro dollar could, for instance, go down to the 38.2 fib. And we said a pullback to, for instance, this level here could be a potential shorting area to the 38.2 fib, and maybe even to the 50 if we get follow through, but we didn't get follow through. On the 5-minute chart, I said I was specifically looking for a 3-wave move up, which we got, but it was a bit shorter here than I expected. Right, I expected maybe something to go up to like this. We stopped here instead, but I did say that the 61.8 or the 78.6 fib area was roughly where I would expect price to stop. That's what indeed happened. And we fell down to the minus 61.8 target. So that's basically it. After that, we got a bounce at the 38.2 fib. Oh, sorry about that. We got a bounce at the 38.2 fib, as we can see here. And we bounced and been in consolidation ever since throughout the rest of the day and this morning and the Asian session, which is logical because the euro dollar doesn't move that much normally after London closes, right? Or at least after New York closes at minimum. So what can we expect today? Well, we still have the potential to move down to the 50 fib. It seems like actually we are making some downside momentum as we speak. That could happen today. The other opportunity, which would be with the trend, because this is an uptrend, if anyone has any doubts, just look at this hourly chart. And what do we see here? Well, we see impulsive price action to the upside, momentum to the upside. We see correction to the downside. So obviously the upsides are fast and move a lot of pips. The downsides are slow, don't move as many pips. So that's something that can be seen on this euro-dollar chart. If you have any doubts about what is impulse, what is correction, then you can look, for instance, at the candles themselves. Are the majority of the candles in one direction? Yes. In this area, we can see most candles are up. Are the upside candles, the momentum candles, are they bigger than the correction candles? Yes, the momentum candles are big. That's criteria number 2. And the third one is, are the closes, are they near the high in this case? Yes, most of them are close to the high. They're not a lot of wicks. There are not many, dojis and mixed candles. So this is a momentum move. The opposite is true for this one, right? Mixed candles, mixed closes, mixed sizes, no clear direction. So if you doubt about momentum correction, you can use those 3 criteria to understand what part is momentum, what part is correction. So I just want to check, is the sound okay, by the way? I want to check. I don't see any text as yet, so it should be okay, but let me check with you. Alrighty. So if you can confirm with a Y or a yes that the sound is working, that would be great. So, what could be today? Thank you, Sokol. What could be today is basically, because we have uptrend, we have up momentum. If we break above this magenta, then basically it would be a with the trend continuation, right? That's what I would be looking for. That would be the best trade in my opinion. But will it happen today or will it happen tomorrow? That's the question mark. And it might not happen today. It could happen today if it does, or even a break, for instance, these tops like this. Then that would be an idea that we're going back up. That's something very interesting because that's with the momentum. That's with the trend. The downside might happen, but we are more vulnerable, I think, in its outlook because basically, what is the target? The target could be the 50 fib, or not even maybe the 50. Maybe we just bounce right here, right now, potentially. So it's more dangerous to trade, I think. But if we do reach the 50, that itself could be again the bouncing spot because we stopped at the 23.6 fib, we stopped at the 38.2 fib, and we could stop again at the 50. And that would be an interesting potential for people who like those trades to go long there. If you either at that 138 level exactly, or 138.11, or if you wait for confirmation of price stopping at that level. The 50 fib will definitely be a valuable level because we had a pretty strong up move, as you can see. So when you get to 50%, that's a pretty decent probability that that will act as a support and act as a bouncing spot. So one way of measuring, let me put moving averages on quickly. Let's see. It's going to be interesting to see how price responds when it gets back up to here. If it does, whether we get a rejection, some rejection here, and then a break up, or do we get followed through down? If we do get followed through down, then the 50 fib at 138.10, there could be some space to the downside. Let's take a look at our Camarilla. Alrighty, you see if the 50-minute chart, or let's keep it on the 30 maybe, you can see the pivot points are still very close to each other. That's because yesterday's price action, just like Monday's price action, was very mild on the euro dollar. And if price action is mild, then the pivot points here on the Kimberella are going to be close to each other. So basically it's saying there's a 20 pip gap between this bottom and the 138.13. So the L5 target on the Kimberella is equal to the 50 fib basically, right? And this is pretty cool because you do often see that confluence, which is, yesterday we talked about trading confluence as well. This is one of those. The L5 is at 138.13, right? And the 50 fib is at 138.11. Well, I mean, that's only 2 pips difference. That's confluence, right? So it's saying basically, wait for the break of this bottom, and there's a trade down for 20 pips down to 138.13. That's a bit small zone, but that's because of those pivot points as I already indicated. The thing is, though, that what I'm also saying is that the L3, there could be a potential bounce here. So we have to see when price does bounce, as it is doing now, how it's going to react in this zone. Is it going to bounce again back down for more downside like this from the pivot, or are we going to see actually a break to the upside like this? The 138.70 is still H3, so we have to be careful of that. But if we break above it, preferably what I like to do is wait for confirmation of a break. So I guess a break, pullback, and bounce, we should see upside. The H4 is only at 138.80 though. How about the pound dollar? Pound dollar is saying H4 long breakout at 166.46. Which roughly makes sense to me. We didn't do our analysis yet on this one, but I was looking at this trend line as an idea that could be a breakout potential. Why? Because we've already completed 5 waves down. Now, you don't have to be a big wave analysis to see that, right? Everyone can see that, in fact. It's not a rocket science. So there is the potential, therefore, for a 3-wave correction like this. Will it happen? We'll see. One of the confirmations that I'm looking for is a break of this magenta to have an idea that this could happen. Therefore, indeed, break of magenta and H4 could see this potential upside like that. How about the downside? Let's take a look. Basically wants not only a break of this bottom, but actually wants price to go a bit further down. 165.84. Let me take a look at the bigger fib here. 1 second. Okay, so it basically wants a break of this bottom, and then there's potentially a trade down to the 50 fib, which makes sense. Okay, I'm not sure how visible that is, but let me zoom into the hourly. And we can see basically upon the break of the bigger bottom, some space to the downside here. Good. I don't know how visible this is, so let me move back to the charts with maybe a white background. And let's go to the pound dollar. Way's asking, can it be a range bound with a 553 formation? Let me first go to the blank chart. So I don't want to use a very crowded chart maybe. I'm not sure how you find this visible as a viewer if you like all these moving averages. So for me, I like to look at it, but I'll try to keep a more mixed, a more plain background maybe. Let's see. Can it be a range bound with a 553 formation? Let's see. I'm trying to decipher 553. Not 100% sure what way means. Let's see. Well, this is looking like a correction, but the question is what type of correction. The thing is that these tops broke this top. So therefore, I would say the likelihood of this being one correction is decent, whereas this is one correction as well. So it seems to be like we're building on a new leg here of correction. So that's how I would split the corrections at the moment. If this top would not have been broken, then it could have been indeed that this is one correction like this. But now that seems less likely to me. I'm not sure if I'm answering your question, by the way. I'm just trying to think what it could be. If we zoom into the hourly, therefore the likelihood of, because this has kind of like 5 waves in it, but this top got broken. So therefore I mean, it's probably not like that this is one correction. Therefore, I think there's a chance that this is kind of like an impulsive zigzag. So we could see again a zigzag or a triangle, and then followed by another zigzag. That's what I'm thinking at the moment. So if we break, yes, indeed, wait. So if we break this magenta, then I think we can catch like the third part of a B correction, I was thinking. And then we could expect maybe something like this, and then down, for instance, and then catch this part of the trade. Something like that. Alrighty, so let me see. I got a question from Amdadul. Well, the direction, I don't know. I think I do that, but basically what I'm always trying to indicate is what levels I'm looking for to break, because basically, although there's a trend, we never know, for instance, or if there's a lack of trend, we never know 100% what the currency is going to do ever, right? It's just a probability. So what I'm looking for always is certain levels for price to do this or that, then I will do that or that. For instance, if it breaks this magenta, then I'm interested in taking it long, for instance, because that's the confirmation I'm looking for, right? Yesterday, when the euro dollar pulled back to, for instance, let's see, where was it? This resistance level. Then I said, well, if it pulls back here, there's a decent chance to go down to the 38.2, which will be a bouncing spot. Then it depends if it's going to be a strong bounce or a mild bounce, right? If we get a bear flag, I said we could see some downside continuation, for instance, right? So that's just my method of trading because it's based on experience. Because yeah, I know if it's a bear flag, we could see continuation. If it's not a bear flag, we probably will not see continuation that day. So I think that is direction, if you follow what I mean. Does that make sense? With the pound dollar, if it doesn't break this magenta, there is a potential for price to I guess, move along further, but it seems a bit risky to me at the moment. But there could be some follow through to the 50 fib. Right, that would be 165.40-ish. Let's see. The Camarilla said a break of 166, even 165.80 before we have some downside momentum potential. So that's still a while from here. Let's take a look at the hourly. Let's see. We could put a trend line like this, and that would be a break as we speak, in fact. It could be interesting. We can keep an eye on this break, because if it indeed posts a 50-minute candle, for instance, underneath a pullback, that could be the trigger itself. This is actually a trigger potential for a bearish break of this consolidation. So something to keep an eye on. If it wouldn't even be there could have been even a potential break right here, for instance, right? Some traders might be jumping in right now. Personally, I'd rather wait for this to settle let it close, especially in the pound so early, and let it hook back for that downside. So I want to see how price responds to this break. If we get a big wick on the hourly candle, then this is more of a false break. So that's something I'm looking for. Okay. I'm not sure which part you mean, Amdudul, in response to your question or in response to this pound dollar. Okay. Well, also let me know what your feedback is on my response to your question, because does that make sense, or do you have, I'm not sure what you're looking for. If you're looking for, I'm not sure exactly, to be honest. If you're saying like, I want, it depends on situation to situation, what tools we use, for instance. In some cases, I like it like this, for instance, the euro dollar. If price gets to the 50 fib, then if the price gets to the 50 fib, it's right there. It's a good bouncing spot. Now, I cannot say that for sure with 100% guarantee will mean we move up to 140. But there is that decent probability, and 50 fib will be a bouncing spot. Right? If you use a safe stop loss here or here, then there's a good chance you're not going to lose on that trade. Right? Not 100%, never 100%. So in the euro dollar, because the trend is up and the 50% is a support, that the direction is up. Maybe that makes it more clear. I don't know. Okay, so let me know if that makes it more clear. The pound dollar, this is a break of a triangle formation, which means that there is bearish momentum here, right? We already had bearish momentum prior to that on Monday and Tuesday a bit, and today we're seeing a break of this formation to the downside. So that's good trigger. Some traders could be trading this break of this triangle immediately upon the break of the trend line or the break of this fractal. Personally, I don't want to do that. It's early in the day, and I'd rather wait and see how price responds to this trend line. What I mean with this response means that how does it break? If I look at this hourly chart, for instance, is there going to be a 1 hour bearish candle below the trend line, or will I see a big wick at the bottom of the candle? If there's a big wick, then there's some buying pressure, and then the chances of this being a sustainable break are decreasing. If there's a good bearish candle, then the chances of this being a good break are increasing. Then the question is where to enter. Personally, I would wait for a hook back to this broken trend line and see if I, on a lower time frame, get some reaction to that level to see, and then it would be worth it for me to trade it. So I'm still cautious, especially at this point. But some traders would be trading that. The stop loss I would put higher, though. If I would be trading that, I would put it above this level, not about this one. Let me see where the position would be. Although it's just a few pips difference, but still. Let's see. But thanks for the question. I mean, I definitely encourage questions. And if anyone else has questions, by all means, let me know. Maybe some concepts that I'm using do not make sense or are unknown to you, so I gladly explain that in more depth, okay, or more detail. Looking at today's initial low, which is about 166.11. And initial highs at 166.35. So that's our primary, primary high-low of today, our initial high-low of today. So yes, if any shorting has to be done or will be done, then I would put the stop loss above this level. Usually, if a top or initial high or initial low gets broken by 8 pips, we see a dip down. So the initial high of today is 166.35. That means stop loss would have to be above 166.45 to give more space to a potential pop above and down again. Same holds true for the downside. If we break this bottom, we could see a pop up again after 8-pip break, which means about 166.03-ish. We probably see a bounce. And when we get the bounce, then, as I said, looking for a hook back to this broken trend line and probably close to this initial high. If we break this initial high, then this could still be a resistance spot. So let's keep an eye on it throughout our session. Let's see, Aussie USD moving down. However, that could be a support level. Could be. Let's see. It could be at least a bouncing level, right? Will it be the turning spot for upside? That remains to be seen, but it's definitely a bouncing spot. Someone said that by the end of the week it would be 78.6 fib. So that person was right. Well, actually, earlier than that, it's the middle of the week, and we're already there. So whoever that was, good job. We are now at a bouncing spot because of this trend line as well, which is a support line. So I would think that there's a decent chance of bouncing right here to the upside. All right, very simple put. If we break above these tops, we're getting that confirmation, or these tops right in here. So that could be an entry if you like this potential. An entry right above these tops could be the entry with the stop loss below here. And the target depends how aggressive you want to trade it. If you were looking for a conservative target, then target these bottoms right in here. If you're looking for a more aggressive target, you could aim for this top. Or you can even aim for the bigger daily 50 fib at 92. So that depends how aggressive you want to be in this potential. So there are three levels one can think of. 1, conservative; 2, a bit more aggressive; 3, the very aggressive one. Now in this case, there's nothing wrong with 3 necessarily, because it could go that high. Of course, the chances of the trade maybe materializing are less. If you want to go for the highest target, instead of using a very, very tight stop loss just below this bottom, one could use a looser stop loss below this bottom, right? Because if that bottom gets broken, then the whole outlook of the odd USD is changing. We have this support line and we have this bottom. Those are key levels. Just because we break the support level, let's say we don't bounce here, or we bounce a bit and then we break down like this, right? Anything above this magenta is still potentially bullish. Anything between the magenta and purple is a neutral zone, and anything below this bottom is getting into bearish territory, right? So my point is that if you use a stop loss here, it's safer, which means that if you aim for a higher target at 92 or even 93.40, then you have a bit more space for the trade to develop, and it's still a good R2R. All right, so 2 potential stop loss potentials here, or tight. If you use tight, then it might be good to aim for a TP that is closer by, like here, here, or here. So I hope that makes sense. At the moment, the upside seems more likely for at least a move up to this bottom. That seems to me a decent probability. Now when we get to the resistance, there is a decent chance we'll respect that resistance, and then we'll have to see what happens. We'll probably bounce again, And then we'll probably either break down and break the support line or indeed make this upside, bigger upside. This is why this magenta line is a bouncer break spot. So trading it here would be a bounce trade off of that trade, off of this trend line. However, it depends how you trade it. If you took a buy right in here, right off the trend line, that's trading the trend line. If you're waiting for a break of the smaller consolidation, then you're basically trading a breakout after a bounce. Okay, so anyhow, hope that makes sense. If not, I don't want to make it too complicated for you. Just want to explain, extra explanation here. Let me think for a second. Basically, if you look at the daily, there's still a downtrend here, right? But we are making upward momentum in the most recent spot. So I don't want to complicate things, but just to give you an idea, this is a pretty sturdy upside. So what this potential trade setup would be a 4-hour with the trend setup up to the 50% daily fib. And that's where the daily downtrend could kick in again. Right, so the weekly and daily. So I hope that makes sense. You see, the 50 fib weekly daily spot for downtrend continuation where I have there. And the bounce here could be the 4H trend continuation. A break of that magenta line and a break of purple would mean that 4H is also down, together with the weekly and daily that are already down. So I hope that makes sense. If not, let me know. We can take a look again or from a different angle. Let's see, dollar yen. Alrighty, dollar yen. Yesterday got a bounce off the 38.2 fib as well. And what I was expecting indeed happened. We got this three-wave ABC correction. Now, is that ABC correction finished? Not sure yet, but did expect that, here, watch out because we can make that extra correction. To me, however, this entire thing is starting to look bullish, right? This is a pretty sturdy impulse. This is a sturdy correction. Not a sturdy correction. This is a, sorry, scratch that. This is actually a slower correction, I meant to say. This was a pretty big impulse. This is kind of a correctional type of formation, right? If you look at the market structure. So there is a chance that we can continue to the upside like this and follow through with that momentum up. When do we know that can happen? By using a trend line like this, for instance, or even maybe waiting for this break here. That would be a first break and then the second break. Once we break that trend line, then we have space up to 104, 105 in fact, roughly speaking. Okay. Now, the reason why I'm saying wait for this break is because we don't know if this correction is finished. It does look so. It looks like we have 5 waves here, but still I would be careful because this could be the 4th wave, in fact, something like this, and we're going down for 5. So that's why still want to be careful. If this downside momentum still has maybe some legs left. All right, so I hope that makes sense. All right? It's always about probabilities. We never know if a certain move is finished, if a certain correction is finished, if the trend is over, if a reversal is over. No one knows. All we can judge is whether certain levels have a high probability of breaking, have a high probability of bouncing, and whether there's a certain space that is a decent probability to trade. And if it's a decent probability, whether it's worth the reward to risk ratio. And then if it is, then there's a trade. There are certain areas that, of course, have higher probabilities, right? If price gets to a deeper fib, for instance, then that's always pleasant because then you know that the chances of a bounce coming are getting higher if you fibbed correctly. Right? So there are certain cases where I'm expecting at least a 30 or 50 pip bounce, and the likelihood of that is pretty big, but never 100%. So we can use this fib, and if we do make one more fall, it will be the 50 fib. That will be interesting. That's where I would expect to bounce. That could be a very interesting longing area. Potential. Let's take a look at the 4-hour chart. Once again, if you're multitasking and you're wondering which 50 fib, that's this one here. So let's take a look at this trend line. It's connecting tops, basically. This could still be a correction, funny enough. So what we're really looking for is a break of this trend line, because then we know that this is continuing. Until then, we never 100% know. Until then, this could still be actually a correction, and we found resistance. Therefore, the best opportunity, I think, is above magenta from this 4-hour perspective. Okay? Alrighty, now from the daily perspective, what does that mean? Let me show you. If we break magenta, then what is one trend line I have to add? 1 second. Let me go back to the daily chart here. If we break magenta, then we have a trade up to the monthly trend line, and that's something that could be resistance again. Okay, so if we break purple, then there's really a decent space here, up to the -272 and up to the -618. All right, we talked about this yesterday, so I don't want to emphasize or dive into it too long, but that would be the space to the upside. Good. What else? What else is going on? Euro pound, as I said yesterday, it's close to this resistance. It's going to have some struggle, so be careful of that. Let's see. How about the Kiwi? Kiwi seems to be bouncing here, in fact. Could be an interesting trade. We have a Kiwi interest rate, so we have to be careful of that. But looking for a break, for instance, of this trend line, we are in a triangle, roughly speaking, depending how you draw it, something like that. So a breakout to the upside could be interesting. That would be a with the trend continuation breakout trade. Those are always interesting. And the other option, of course, could be a bounce again off this bottom. Could also be interesting. So looking for upside. Kiwi looks bullish to me. At the moment, the structure is bullish. It's an uptrend, and it's making a chart pattern here. So there's the chance that we continue with this trend. and this is just a correction. Something like what I've drawn on the chart. The green arrows are impulse, the red circles are correction. Alrighty. So that's the Kiwi. What else to discuss? Let's see, we got dollar CAD. Dollar CAD made some downside, but didn't go too far, did it? It went just a bit, and we got a pin bar already. We got a hourly pin bar, in fact. So what I was saying yesterday is that we are in a triangle like this. And when we have a triangle, we really never, the triangle itself is indicating a consolidation. What does consolidation mean? That means price is ranging. Price is stuck between two levels. It's using support and it's using resistance and can't break either of the two, which means that if we break the support or resistance, there's a decent chance that the price is going to continue with the break. Now, sometimes, of course, you want to be careful with the break because the breaks might not get followed through. Those are false breaks. Looking at how price action breaks the triangles is therefore important, and maybe using momentum indicators like an awesome oscillator or others like ADX. As long as price stays in this triangle, though, for instance, it's interesting maybe for a range trader. Now, the range trader could have been shorting here, but unfortunately, that trade didn't go that far, and we got a bounce earlier than expected. And it seems like, in fact, because we get the bounce here, that this is looking like we're going to get a bullish break. This is looking more and more like an impulse, correction, momentum, or / impulse, correction, and we're going to get a follow through here. So if we put a fib, for instance, on this upside, what do we see? A 38.2 fib bounce. So if you're looking to trade fibs, but you don't want to trade directly at the fibs, then you can wait for a price action signal like this, which is an hourly pin bar, and that's always a potential entry upon the pin bar. So let's take a look at the 15 now. And you can see even this trend line, a break of these tops basically could be the trigger. So a break, wait for a pullback, and take the pullback, or wait for a bounce. Could be the preferred entry methods here. Let's see. I got a question from Sokol. Unfortunately, I'm not able to look at that that particular pair as far as I know. I can recheck, but I doubt that. No. It's not part. Unfortunately, not part of the. As far as I know, at least. Let me check here. Or maybe it is. Maybe I'm underestimating it. Let me see. No, I really don't see it. Oh, okay. Cool. So let me see if I can find that, but I'll do that a bit later, okay? Or I can do it now. Why not? Just need to find this one. Let's see if that works out. You see, the currency pairs still remain the same, though. I don't see that. No, I don't see it. Maybe market watch, possible indeed. Let's see. Still don't see that particular pair. I can maybe, no. Yeah, I already did that, in fact, show all. But thanks, Wave, for the tiptoe. But did do that, did it the second time now, and don't see it. I don't think I don't think I have that one. All right, not sure. Soko, do you have Admiral Markets and you see that particular pair? If so, let me know. Otherwise, I don't think I see it. Okay. Let me go back to some other pairs now. Let's see. You have it? Okay. Well, I did my best. Otherwise, send me a screenshot or something because I didn't see its position. I think that what I had was a standard account, that particular account I opened. Strange. Let's see. Let's take a look at pound yen maybe, and euro yen. Pound yen correcting quite a lot. Now this break to the upside was pretty likely because of this momentum, and this was corrective, so a continuation seemed likely. If we put a fib like this, you can see we came very close to the minus 272 target, although we did miss it. That normally doesn't happen too often, although it could always miss by a few pips. If you look at the daily, though, there's still a lot of, there's a lot of upside momentum here. However, this was a sturdy correction. This could be a correction as well. So personally, I would be a bit neutral here. I don't see any favorites at the moment that I really would want to look for. In this case, I'm just standing on the sidelines and really don't have any particular, not even a particular level that I'm looking for to say, okay, then I'm interested in this or that, like contrary to the dollar CAD or the Kiwi or the Aussie or euro pound, this one, or dollar yen. This one doesn't really have that to me. I mean, I can see maybe a break of, if this trend line breaks like this. Oh. A break of that trend line, maybe we get some upside again. Downside, we are having quite a lot of bearish momentum on this 50-minute chart. I don't know. Not 100% sure here. I'd rather take a look at something else. Let's take a look at euro yen. If you have a particular opinion on pound yen, by all means let me know, but on any particular currency, it doesn't really matter. Euro yen, I do like this break if that happens. That could take a while maybe. I do like the potential of price going back to a support. What kind of support? Maybe any of these fibs, for instance, like the 38.2. Oh. You put back these fibs. So I'm putting basically, for those of you who are wondering, I'm basically putting a fib from bottom to top and looking where this could be a potential correction where that could stop, and that could be an interesting buying spot. So why do I take the bottom and top? Because we did make upside momentum like this, so we could continue maybe. It's possible. So that's why we could see maybe a bounce when we go back to these broken tops at the 50 fib. That could be a bouncing spot, for instance. All right, and the target will be the minus 272 target, which is equal to this top as well. So the 50 fib, right? Because those are broken tops, for instance, here. But to be honest, any of these fibs could be a bouncing spot. So I have to see which one is used, or maybe multiple ones would be used. So back to the 15-minute, and let me just put one more fib. We can also put a fib on the correction, right? It's basically saying, okay, this is the first correction down. We went up, but we couldn't break this top, which means that this is a correction. Well, not necessarily. Even if we break the top, it could still be a correction, in fact. But anyhow, in this case, it's clear, though. That is definitely a correction, right? And we're at the minus 618 target. So let's see. Let me take a look at the 15 again. I'm not sure. Here too, a bit doubtful about the intermediate future. If we break above this, I like the long, right? If we bounce off the 50 fib, I like the long. But anything between this, the top, the trend line, and the 50 fib is not as easy. The 38.2 could be a bouncing spot, but could be just a smaller bouncing spot. And right here, right now, probably the only thing that could be interesting is if we move up for a potential resistance back down. That's the only thing that seems interesting. Or if we do fall, then a bounce off this, the 38.2 fib. We take a look at the pound odd, and your odd pound odd is basically stuck in this triangle. So the direction is not as clear. We do have a lot of upside momentum, but maybe this upside momentum is actually fading away, because if you look at the weekly chart, for instance, what we see is a pretty sturdy, let's take a look, 1, 2, 3, 4, 5, 6 weeks that haven't broken this top. So in that regard, a bigger correction is increasing in likelihood, and therefore if I look at this triangle, I wouldn't say that the triangle is a bullish triangle. It is definitely, here's momentum, definitely this is a triangle, but if it breaks the bottom, there could actually be a decent chance of this turning out to be a bigger retracement. In that case, we can put a fib on this downside, and we see that the price stopped at the 61.8 fib, and that the target would be these, and that this would be spaces to the downside upon the break of magenta. Now, if you break magenta to the upside, I would be a bit more surprised, because this is looking more like a reversal pattern than continuation pattern. But then still, if we break magenta, then then apparently this is a bullish triangle. That's fine, and it makes sense to trade it to the upside. Just be careful of, always, of course, be careful of the resistance, the top, for instance. That's all. We definitely have to be careful of those, of course. Let's see. Other than that, there is a potential of this triangle continuing. What I mean with that is that this could just be one part of the triangle. This could be second. This could be the third. This could be the fourth and a fifth part, for instance. We could just continue bouncing off these magenta lines, of course, right? That's possible as well. And the break of either of these lines would then be, would be postponed or prolonged. That's all I guess I have to say on this pound odd. Let's take a look at the euro odd. I think that's quite similar, in fact, if I remember correctly. Let's see. Let's see. Well, let me go to the weekly. Is it the same as the euro odd? We got 1, 2, 3, 4, 5, 6 weeks as well. Yeah, quite a sideways range here. Could even be maybe this as well. Head and shoulders, right? So that too, in a way, more of a bearish signal. So that's possible. Now, I don't want to. I don't want to underestimate the trend, which is still up, but there are definitely some signals that a reversal could happen here, or a big retracement. So a break of this purple, a break of this first purple and the second purple would indicate that. And the target, in that case, just like the pound odd, we can put a fib on this first downside, and these would be the targets. And this would be the downside space. Right there. For the moment, though, price is pushing up. So let's take a look at the 4-hour. Oh. Let's see. Yeah, it is close to resistance. I mean, it's not a particular area that I find very interesting to risk. Maybe just like the odd USD, though, we have the same scenario that we could be at a bouncing spot. Well, this is a resistance. So we could maybe, if we break this smaller consolidation, make a bounce to the downside here off of that resistance. Right? Resistance usually causes the currency to stop and could even cause the currency to retrace deeper. That could happen on a euro odd too. So that, if anything, then a break of this could mean downside. Like the odd USD, though, it depends what one wants to target. If you want to target a conservative target, that aim for instance, these tops in here at around 153.60-ish, 70. Other than that, I don't really have anything to add. I think if this top does get broken, then there is a chance to go to a higher fib like the 78.6, right? Because we stopped at the 61.8 here. We stopped at the 50 fib here. We stopped at the 38.2 fib here. So if we break these tops, we have a potential to move up to the next fib. right? If something happens once, it's coincidence. If it happens second time, it's a pattern already. So with fibs, we see this happening multiple times over and over again on all time frames, on all currency pairs. So that's why fibs are so important. Let's see, I think someone mentioned the odd New Zealand or not? No. Oh, sorry. Somehow I had odd New Zealand in my mind. Odd New Zealand is breaking this this bottom. This was a triangle. You can see that this is getting a good follow through. And as you can see, these were the spaces, and it's filling those spaces. Let's see, anything else to discuss? I don't like the Euro New Zealand, Pound New Zealand at the moment too much though. But one thing to note, because of its bigger consolidation, one important thing though to realize is that the Pound New Zealand is breaking to the downside at the moment, right? We had this pattern going on for very long, in fact, and we are breaking that support line. So could be an interesting development. What would be the target? The target would be this minus 272 target at first. Then the minus 618 target. So that seems pretty, actually, things are changing now. This was a big consolidation, so I didn't like that much. But with this break, things do become a bit different. So with that said, let's take a look. Let's see. We got a break of this trend line already. So basically, we already are moving down. I would think that now it doesn't make sense. We're too close to this bottom to take a trade to the downside. Looking for downside, right? Clear, because we broke this trend line, so this is down momentum. So I would like to have a pullback before taking it down here. In the grander scheme of things, if you are looking for a reversal trade, the only thing that makes sense is to wait for price to get to the minus 272 or to the minus 618 and see a bounce off of those levels. That would be the only reversal trade that could make a bit of sense. Otherwise, we're clearly in the downtrend here at the moment, so any upside does not make sense. One thing that what the trader could do is wait for this 4-hour candle to finish, wait for the retracement of that 4-hour candle up to, for instance, like this level here, 196.30, stop loss above this top, and aim for the minus 272 target. Something like that, as I have on the boxes there. So let me check when this 4-hour candle finishes. Right, don't forget that like so many candles get retraced, if you know what I mean. They get price retraces back to that level. So it makes sense to zoom out one time frame and look for a retracement of the candle of one time frame higher, because most likely it's going to happen. If you look at all these hourly candles, almost every candle gets retraced. It's difficult to find a candle that doesn't get retraced, and I can only see a couple. I can see, first of all, here, that level, that candle never got retraced. If you're waiting for a retrace of that candle, tough luck. It never got there. Price never went back. Other than that, this candle got retraced. All of these got retraced. In fact, I don't see really any candle that didn't get retraced, to be honest. All of them got retraced. Only one candle. One candle out of a whole price action of about 2 weeks. So it makes you think, right? What that basically means is that we have more time to plan an entry than we think. Just because certain events happen doesn't mean we have to enter right here, right now. We have the potential to plan an entry, to stake out a good position, right? Or at least a position that could save us a few pips maybe. Now, once in a while we're going to miss a trade because of that. But at least in other cases, we get a bit better priced. It also avoids us overtrading and jumping in trades, basically. And as you can see, not many trades, don't get retraced. Only this candle. And in fact, even a move like this that gets pretty good follow through here, eventually does get a retrace back to a fib, right? To the 61.8 fib. That's why fibs are so handy. But fibs are most handy, of course, when the price is trending. And well, according to what I'm looking for, if a trend line like this breaks, then we are at least in a potential downtrend. And we got a confirmation here. But anyhow, let's see. This candle closes, of course, in 7 minutes, logically, but let's see. The 4-hour candle seems to be closing in about 2 hours from now, 2 hours and 7 minutes. And this 4-hour candle is closing. So 2 hours and 7 minutes from now, we can look for the retrace of this 4-hour candle, which means basically in New York, we can wait for the retrace, stake out a position potentially, and then see if that is a resistance, right? Now this is of course a trade idea. I mean, as always, the risk is yours to take. It's your decision to trade it. If not, it's just a trade idea, right? So that this is whether the trade works or not, that's never known, etc. Right? So that's based off this 4-hour chart. Well, folks, I guess I don't want to hold you up too long, or keep you here while I've, for my feeling, talked about everything. In fact, so do you have any questions? On New Zealand, we talked about, but yeah, I didn't talk about the future. Indeed, I just talked about that this was a good trade. That's true. Well, the thing is that I'm neutral at the moment, to be very honest. It's just, if I look at the odd New Zealand, I don't see any trades, to be very precise. I see price, and I see it's very close to former supports here, which makes me a bit leery about downside. But obviously, as you can see on this daily chart, we had a very strong downtrend. But because we're so close to support, because this is a major level, 104.40, I am not interested in that trend continuation at the moment, because I'm scared that there is the potential for price to bounce up. If you're a reversal trader, you might want to think about looking for a long, in fact, right at the 886 fib. But there is a significant risk involved because of the strong momentum down, that it's just going to be a small bounce, and then who knows, we could continue. But so basically what I don't like about this is I'm not a big reversal trader, so that's why I don't like that particular idea, for myself at least. I am a with the trend trader, so I like to trade it down because the trend is down. It's just that because we are at a very big monthly support level, I don't like trading it to the downside here, because we're very close to the support. Also, if you look at the risk, if you look at how much risk we're having, this is the potential risk. Look at this 4-hour chart. This is the potential risk, and the reward is just a bit. So there's not much space left to the downside. That would be my main reason. So I'm not too interested at the moment on this odd New Zealand. The break, for instance, of this trend line and trading it down from here down to the 786 fib did make sense. Or and maybe extension to 886. All right, that's, I guess, it from that point of view. Tonight, Toronto, by the way, has a webinar. I'm not sure what the topic is, but it's usual time at 5 p.m. GMT or 6 p.m. Central European time. We'll be back tomorrow. Oh yeah, he's talking about Renko indeed. Yeah. Yeah, that's going to be interesting. I would definitely encourage people to go there. I actually was planning to look at that webinar as well, but I don't think I can make it, unfortunately, due to other commitments. That's a pity because I was planning to take a look, actually. So definitely worth it. Tomorrow we'll be back, of course, with this session, and then tomorrow evening we're going to take a look at the best take profit zones. So I think that would be very cool. It's the same time, 6 p.m., 5 p.m. GMT. Yep, it is a 30-minute chart indeed. Personally, I mean, depends how you look at it. The 30-minute chart did get retraced. I personally look at hourly candles. So that's 2 minutes still left. What I'm looking for is not a retracement of the 30-minute chart, to be honest, but more like a hook back to this resistance zone. Maybe that's too demanding. Maybe price will not get there. But that's what I'm waiting for, though. I mean, if it doesn't hook back that far, then and it does break lower, then I would try to trade it from lower levels and down to lower again, right? If we do break like this, bounce up like this, then I could be trading it here later today for that downside continuation. For the moment, though, I'm looking for this level, though, if you see what I mean. But it doesn't mean that I will necessarily always look for that level the whole day, if you see what I mean. If we do break above this magenta, then I would be looking up for a trade up to the 61.8 fib. It also depends how aggressive price is moving up like this. If it moves up very aggressive, by the way, let's say we get one more break, and suddenly we really move up a lot fast like this, then I wouldn't be looking for shorts anymore. I definitely want to see some respect for price in this level. Otherwise, I don't want people to misunderstand me, and what could happen is, I don't know, we get divergence between these bottoms. This is actually just a correction like this, and boom, we fly up to the 61.8 like that. So you want to be careful of that as well. Let's see. Richard is saying if all these candles have been retraced. No, some of them haven't indeed. Well, let's see. This one hasn't. And this one hasn't. On the 30-minute chart, not. Let's take a look at the hourly. No, these are just indeed levels that haven't been retraced, which basically kind of supports the idea that we're going to go back to those levels to retrace them, and then we'll fall. Because if they haven't been retraced, that means it's unretraced area, let me say it like that. So then there's always the chance the price could go back to retrace that area, in fact. So good point there, Richard. So let's see, we did break through the initial low, then we didn't bounce off 166, but we bounced off 150, 165, 97. So just a couple of pips lower than I thought. Personally, as I said, I'm looking for this move, that is, and then looking for exhaustion here to trade it down. If that doesn't happen, then I'll have to think about a second battle plan later today. I mean, in the sense that we'll have to see how price responds to this breakdown again, and if it makes a bear flag, then I'll trade it from lower. If, however, it makes an aggressive move up, then I would be careful. Let's see, short euro yen. Definitely you have the 50 momentum with you. And let's see. I think that makes sense because there is 15 momentum here, and there is the potential to go to these fibs. So if I were you, it depends how secure you want to go for your take profit. If you really want a safe take profit, go for the 38.2 fib. If you want to hike up that R2R a bit, and I don't know exactly where you took the trade, then you could think about the 50 as a TP. Personally, I wouldn't want to short it right in here. I wouldn't want to join you there. But as I think I said, if it would hook back a bit higher, it could be interesting, right? Personally, I do like the bounce off these fibs or to break the most, I think I said. But yeah, it makes sense if you want to trade it to the downside. If you're haven't joined the downside like Richard, then waiting for a bit of a pullback makes sense. Although I like the pound yen probably a bit more for the pullback. But we'll have to keep an eye on the euro pound as well. All right. So, well, if any of you have, this is my thinking. If anyone wants to share your thoughts or even screenshots of your charts, we could openly discuss together. By all means, now it's a bit late, but or you can even send it now. But we'll be soon closing the room. But by all means, in the next webinars, you can do that. Or if you are curious about a certain concept, just let me know. This is definitely an open session. I mean, I'm just sharing my views, but if you have any questions, why, what, different tools, let me know. Basically, what I'm trying to show is that by using, the structure that I'm trying to use, like incorporate, like trend, filters, trigger, opportunities, entry methods, I think I'm trying to show, and confirmations, waiting for bounces, breaks, confirmations of analysis. I'm just trying to show you how you can find the kind of like the sweetest spots, hopefully. Let's see if I have access to that pair. Not that I know of, but no. It's here? I don't see it though. I see a USD CZK, USD SEC, I see USD BGN, I see USD RON, USD LVL, LTL, EEK, HRK, ARS, CLP, UHA, RUB. Which one is it then? Which signal, which symbol is it? I don't see the SGD in this particular column. Oh, sorry. Oh, you're showing me a link. I thought you were referring to, I'm blind. I thought you were referring to my list. Let me do Control F otherwise it might be difficult for me to find it. Ah, there it is. Yeah. Yeah, probably indeed you're right there, Wei. Doesn't have the Pro one indeed. Let me see. Although, I don't know, maybe I don't have the right account open though. Not sure about that. Probably not, I guess. London has been open for, let's see, an hour and 8 minutes indeed. Yeah, it's a pity that way. Because London open starts at 8 a.m. GMT. At the moment, it's 9:15 a.m. GMT, or 9:15. Sorry, 9:09. So that's about, yeah, it's an hour and 9 minutes now indeed. And the following 3 weeks, or next 2.5 weeks, by the way, the New York session is actually an hour earlier for those living outside of the U.S. and Canada and that didn't have the time shift, because the daily saving time in the U.S. and Canada went forward 1 hour. But as far as I know, it's only in the U.S. and Canada that did that. So for others, that means that New York session actually starts an hour earlier, because U.S. and Canada went an hour ahead, but the others didn't, which means that New York session, although it's still at 8 a.m. Eastern, GMT time, it's noon now instead of 1 p.m. for the next 2.5 weeks still remaining, until most countries move their time again 1 hour. Some don't do that at all, so that will remain then permanently like that. But for those who move their hour again forward 2.5 weeks from now, then it would be back to the usual time. Well, okay, folks, thanks for being here, and thanks for all your comments and questions. Always love to see those, and see you either tonight or tomorrow. Cheers.